Good afternoon. Good afternoon, everyone. I hope you had a great lunch, and we are here really to have a very fruitful discussion about accelerating the inclusion of underserved groups in the digital economy. And it is a great privilege for me to moderate this session. I don't know if I should let you on a little secret, which is not 41. Digital transformation, it's not a choice anymore. It is happening all around us, from instant payment to digital ID, mobile wallets, cross-border remittances, and more. But inclusion is a choice. Inclusion requires deliberate policies, bold innovations, and cross-sectoral partnership. However, there is a risk for those who are already underserved or disadvantaged, like I'm sorry. Like I was saying, that they are already, we have a group, the disadvantaged group, that were already not included. I'm talking about rural population, women, youth, persons with disability, and forcibly displaced persons. I'm talking about refugees and people, they have to leave their home based on climate shocks. These people, they risk being left even further behind. The Kigali Statement of 2019 reminds us of our responsibility to leave no one behind. And we'll see this afternoon, right after, the president of FATF remind us as well in a video that we will watch soon, that financial integrity and financial inclusion are two sides of the same coin. If our systems are not inclusive, they cannot be fully resilient. Today, our session is not about technology. It's more than that. It's about how we make sure that innovation become a bridge of opportunity and not a no wall of exclusion. We are here to share policies, ideas, and action that can help us reach the last mile and give underserved groups not just access, but access with dignity, safety, and trust. I am honored this afternoon to be joined by really a distinguished panel. 5 distinguished leaders who will share not only their country experience, but as well, we have 2 institutions here as well. They will share their experience. I am pleased to invite on the stage the Assistant Governor of Bank of Papua New Guinea, Mr. George Ewap, please. I'll also invite our distinguished chair, the Governor of National Bank of Rwanda, Ms. Soraya Munyana Akusia Remye. Third, I'm going to call on the stage Dr. Nandalal Weerasinghe, the Governor of Central Bank of Sri Lanka. I'll call a dear colleague of mine, Ms. Selina McComb, a Chief Executive Officer, Financial Sector Deepening of Mozambique. And finally, not the least, I'm going to call Ms. Robin Oates, the Head of Sustainable Finance, UN Women. Thank you. Thank you all. Before starting with our round of questions, we're going to play a video that was sent to us by the president of FATF related to our discussion this afternoon.
Hello, dear AFI colleagues. I want to thank the Alliance for Financial Inclusion for inviting me to address you all today at this year's Global Policy Forum. Though I really regret that I cannot be with you in Namibia this week, it is a privilege to share remarks because I see the Alliance for Financial Inclusion and the FATF, the Financial Action Task Force, as missions that are mutually supportive. Financial inclusion is about empowering individuals, strengthening communities, and unlocking opportunities both for growth and for resilience. Around the globe, we have seen how inclusive financial systems can help families weather crises, enable entrepreneurs to grow their businesses, and support sustainable development. And crucially, for those of us that are in the fight against financial crime, by bringing more people into the regulated financial sector, we also bring more financial activity into the light, into the sight of the authorities. In other words, the size of the unregulated market shrinks, and that makes it harder both for criminals and for terrorists to hide their activities. The FATF has listened carefully to the concerns that the anti-money laundering and counter-terrorist financing rules can sometimes create barriers for financial inclusion. And we have taken action to clarify and make sure that this is not the case. Illicit financial rules should not stand in the way of access. Integrity and inclusion must go hand in hand. There are two sides of the same coin. That is why, over the past year, the FATF has first updated its standards, secondly, amended the methodology on how we assess in our mutual evaluations the jurisdictions, and we have issued guidance to promote the full implementation of a proportionate and risk-based approach. All of these changes will help ensure that authorities and financial institutions direct their limited resources towards the areas of higher risks, while encouraging the use of simplified measures in low-risk scenarios. In practice, this means that the more members of underserved and unserved groups can access and use a regulated and secure financial system with fewer and unnecessary barriers, while financial institutions can operate more efficiently in tandem. At the same time, we need to build trust in the system to ensure that people are incentivized to use the regulated services. That's why the FATF has also recently strengthened the international requirements on cross-border payments. These changes, when they come into effect by the end of 2030, will increase transparency of information that accompanies cross-border payments, making the systems safer and more secure. Now we need you, the policymakers, the central bank, the regulators, the supervisors, and all other stakeholders to ensure that your AML CFT practices are fully consistent with the FATF standards. This means applying safeguards proportionately and pushing back effectively against overcompliance and de-risking in the industry, so that meaningful changes can cascade into the private sector and deliver long-lasting impact. Striking the right balance between accessibility and compliance is of course not easy, but it is in our interest to get it right. You know this very well. There's nearly 1.4 billion people in the world that still lack access to a bank account, and closing that gap is essential. It requires all of us to keep advancing both inclusion and integrity together. Moving forward, the Financial Action Task Force will continue working closely together with our FATF network, which includes over 200 jurisdictions. We will work to foster effective, proportionate implementation of the standards and support countries applying the risk-based approach in a way that expands access while safeguarding the financial system. This importantly includes a current project that is related to supporting low-capacity countries. This work is led by South Africa and the World Bank, and it aims to avoid that any restrictions of the access to the global financial system is conducted on the basis of AML-CFT rules. Beyond this, we will promote an even closer dialogue between the private sector's supervisors, international bodies, and other key stakeholders such as AFI to further unlock the potential of the risk-based approach and simplified due diligence measures. This year's Global Policy Forum comes at a key moment. As technology reshapes economies and societies, we must ensure that innovation reduces barriers rather than reinforcing them. Initiatives highlighted through this week's FinTech Showcase, such as to protect consumers from cybercrimes, such as fraud, scams, and identity theft, are a prime example. By working together, we can design policies that expand access, protect customers, and promote trust in financial systems. So I want to commend the AFI network for your leadership in this space. The progress you're driving shows that when we link inclusion and integrity, we can create systems that work better for everyone. Thank you, and I wish you a productive and inspiring forum.
Thank you. We had 90 minutes. Now we reduced to 79, so we'll try to do the best that we can so we can cover this subject. We'll begin by asking each one of our panelists about their experience. I'll start with the governor of Bank of Rwanda. Rwanda has positioned itself as a champion of inclusive finance, including through the Kigali statement that we endorsed as the network at the 2019 Global Policy Forum. How has Rwanda translated the Kigali statement into regulation?
Thank you very much, Georgette, and good afternoon, colleagues and partners. Before Rwanda hosted the AFI GPF in 2019, there had already been work done, I would say, the previous decade to make sure that Rwandans, wherever they are, could have access to financial services. And that was prompted by the first ever demand survey that we did on financial inclusion, the FinScope survey that many of the countries know, which in 2008 showed that only 1 in 5 Rwandans had access to a bank account. That was in 2008. And so, the government decided that it was a priority to establish microfinance institutions in every single sector of our country. So we have the advantage of having a country that is small in size, but great in ambitions. And so we decided to put savings and credit cooperatives in the 416 sectors to make sure that every Rwandan could have access to savings and credit cooperative within 5 kilometers of their household. From there, what happened was also the drive by mobile money. We know that Kenya was a pioneer with M-Pesa, and 2 years later, we always want to go fast in Rwanda, so we wanted 2 days, but it's 2 years later that we had our first mobile money operators starting mobile money services. And then the central bank had to be innovative at the time, 2009, 2010, to actually accompany the telecom company that was saying, I want to offer financial services, and co-design guidelines on how that would happen. Fast forward, in 2016, there was another FinScope survey, and we could see progress in terms of access to financial services, formal financial services, at around now 42%. But it's really one through the Kigali statement where we looked at the underserved groups. The gender gap in 2016 was around 15% between men and women, adult men and women, meaning young girls who are 16 and above that only had bank accounts and mobile money wallets. Second, on the youth, as in many countries in Africa, 65% of our population is aged 30 years old and below. And also looking at forcibly displaced people. Are they having access to financial services? And so this Kigali statement was an impetus to accelerate the financial inclusion of underserved groups. And a few initiatives were taken. One, regulatory framework to make sure that refugees that were in Rwanda, forcibly displaced persons, can have access to an ID, can have access to a mobile money wallet, because without any ID, you cannot open a bank account or mobile money wallet. And we also worked with being the UNHCR, the UN Agency for Refugees, but also government to make sure that any allowances that were given to forcibly displaced persons were through their mobile money wallet. And today, 88% of forcibly displaced persons in Rwanda have access to either a bank account or a mobile money wallet. When it comes to the gender gap, the last FinScope survey in 2024, so that was last year, has indicated that actually that gender gap has shrunk from the 15% we had in 2016 to now 4%. And the reason is, one, COVID accelerated adoption of mobile money services and digital financial services. But secondly, we were very deliberate as a central bank to have targeted financial literacy programs, not only on financial services, but also targeted programs for women on the use of digital financial services. We didn't do it alone. We worked with local authorities where central bankers, even myself, would go to a rural area, talk to representatives of the National Women Council, train them on the benefits of mobile money, and have them go to the villages to train their peers. And what we do is that for every district, we actually have a closing ceremony where we reward the women who have trained more than 3,000 women. They get 200,000 Rwandan franc, it's around $200, but it's also a way to incentivize the work of those National Council of Women representatives. But one thing that was transformational that we hadn't thought about is that the women that are trained, what we do is that we issue them a certificate signed by the governor of the National Bank of Rwanda. And some of these women said, this is the first certificate I've ever had in my life. And so this taught us that as much as central bankers, we tend to be very theoretical in our offices. And I liked what Deputy Governor Leonie this morning said. When you remove your high heels and remove your suits and go sit with those women in villages, then they will listen to you. Otherwise, we would just get reports, send them to every district saying, look at where your financial inclusion rate is, please do something. But once they started seeing us going to those districts, I remember the first district we went to is called Nyaruguru, one of the remote areas in Rwanda with the highest financial exclusion rate. The mayor actually said, if the central bank is coming, what have I done wrong? And we were really reassuring them that this is a partnership we want to create, that we are not there to point fingers, but to work with them on empowering the women and ultimately the men with knowledge about financial literacy and financial services. So I think really what has been instrumental is to understand our role as central bank, that we can, yes, look at financial stability, yes, price stability, but we have to also be closer to the people so that we can really look at financial inclusion as a complement to financial stability, or as a priority if we want to have sustainable financial stability. I will pause here and we can continue the conversation. Thank you.
Really, really very helpful experience that I'm sure a lot of us can put into action. Now I'm going to ask the Assistant Governor Ewap from Papua New Guinea. I know your region is a very specific region, islands everywhere, very scattered around. But among all this, which disadvantaged groups have you prioritized? Because you need to prioritize. And how did you engage stakeholders? Except more than the central bank. How do you engage them?
Thank you. Let me, by way of introduction, thank the Reserve Bank of Namibia for hosting this event here, and thank the governor and the staff for all this event, AFI as well. Thank you. To address the issue of displaced people, Papua New Guinea comes from a background of high level of financial illiteracy, partly because of the structural issues that we have in the country. But the bank has taken a very positive approach in this. Some of the good things that have happened recently is that the Central Bank Act was changed in 2001 with a focus on price stability, but also, unlike the previous act, it also focuses on economic growth. So that changed the ballpark of the game that we play within the central bank. In the bank's Vision 2050, there's the bank's desire to have a bank population by the year 2050. And that's a huge task that we have taken on board. And we're not going to stand by and see this as just a policy paper that we have written. We are taking active actions to ensure that we deliberate on the policy stance. And some of the policy stance that we have, and we've been continuing with this, is the National Financial Inclusion Strategy that we have from 2023. That's like our third National Financial Inclusion Strategy, 23 to 27, to onboard 2 million people into the banking sector. The other that we have is the National Financial Sector Development Strategy, in which the bank is the co-chair of the strategy. And all of them are focusing towards addressing the unbanked people and people in rural areas mainly. Like I said, PNG is a very rugged terrain with 70% of its people living in rural areas without access to financial service. The central bank's policy was designed to ensure that the finance sector develops and to build the right capacity, institutional capacity, and the appropriate instruments so that whatever we develop touches the people at the rural areas. For instance, you can address financial inclusion from both demand side and supply side, but supply side issues are very critical in delivering financial outreach to the unbanked population. The commercial banks in Papua New Guinea are mainly in the rural areas. There's been a lot of de-risking in the rural areas, so that creates a big vacuum for the people, no matter how much they want to take part in the banking sector. That has remained a big challenge. The bank, in recognizing that supply of financial institutions to address financial inclusion became difficult. So in 2002, the bank undertook 2 trial microbank institutions in the country, model them in the rural setting, that they can work and deal with the geographical terrains and people in rural area. A lot of people criticized and thought that this might never work in PNG because they saw the banks moving away from establishing, closing the branch in rural areas and moving into the urban centers. But that big gap was there. And that comes with the unbanked population hoarding a lot of cash with them in those areas. So to fill up the vacuum, we developed these microfinance institutions to trial a model that will work in rural settings. And in the process, we found that product that we've created eventually it became successful. Mm-hmm. So eventually, we decided to roll it out, and it's a very successful institution in the country in terms of microfinance and connecting the people to the banks in the rural areas. And I think the CEO of, I'm glad to say that the CEO of this institution is here, and his name is Trudy Aggie is out there. So if somebody wants to meet him, you can go and meet him. But these are real life stories I'm talking about Papua New Guinea. And this was a test case of a bank that we created, the central bank created, to deal with the people in the rural setting. Okay. The other is to deal with the gender issues. And in the gender issues, we also created a financial institution. It's owned by women and deals mainly with the women folk, but to deal with financial inclusion as well. And one of the board members, we also brought Elizabeth Coble sitting at the back. And I think I'm grateful with these institutions because we have tried a lot of financial inclusion test products. Pilot products have been conducted through those institutions. And this is from the supply side.
Okay. Thank you, Governor. So your priority, the group you prioritize really are rural areas and genders.
Yes.
Thank you. I think you talk about de-risking, Governor. Since we heard the president of FATF talking, as the chair of AFI, Madam Chair, how do you think AFI should address, what should be the role of AFI to intervene for members that are the network in front of FATF?
The FATF, and we really have to commend AFI's initiative to invite FATF President first in El Salvador at the AFI GPF 2024, and now virtually here. Because it's important, and I think that's where AFI as a network has a leverage, that the voice of developing countries in FATF and global standard setting bodies is heard. As we know, FATF is mainly composed of G20 countries. I think there's only, if I'm not mistaken, only one African country in FATF, but they do have the regional FATF bodies in Eastern and Southern Africa. It's the ESMALAG. But for countries who have gone through this painful mutual evaluation exercise, we have to recognize that it's extremely difficult to comply with all the recommendations, the 40 recommendations of FATF, and more complex to have enforcement of those standards or effectiveness in how we implement the anti-money laundering and counter-terrorism financing frameworks. And, you know, President Liza of FATF laid it out accurately in terms of the need to strengthen capacity of our institutions to be able to comply with these standards, but not only the capacity of our institutions or regulators, central banks, law enforcement authorities, but the capacity of private sector and financial institutions to be able to understand financial crime, where it comes from and how to fight it, but also having enough resources to be able to put in place tools, mechanisms, frameworks to fight financial crime. Secondly, there had been also a sense that this FATF grade listing is unfair to low-income countries, and if you look at the countries that are on the current FATF grey list, more than 60% are African countries. But can we say that the size of our economies and financial systems are the ones that pose more risk to the global financial system. I'll leave it to the jury. So I'm really happy that FATF has revised its guidelines and is looking at how actually being unproportionate and really the proportional risk-based approach is the right approach. Then you risk excluding more people from financial systems. And so I believe that as AFI, and yesterday I mentioned it in my speech, one of the priorities to continue these engagements, make sure that the voices of all AFI members are heard when we are engaging FATF. And you can see that already from that first conversation, discussions with FATF president, something has happened in their reforms. So it's an initiative to continue, I think, building on and have really AFI as a catalyst for these discussions and a catalyst for reforms that are needed so that we don't have a portion of our population or even our countries excluded from the international financial services. Thank you.
Thank you, Governor. Now I'm going to ask Governor Weerasinghe from the Central Bank of Sri Lanka. With digital finance rising steadily in Sri Lanka, what have been the most key learnings in ensuring these innovations reach disadvantaged groups?
Thank you very much. First of all, let me thank the Bank of Zambia and the AFI for giving us this opportunity. So just to set the stage, I think it's useful to share some of the current status in comparison to other countries. For example, people who are not familiar, Sri Lanka is an island economy where we have almost 22 million population. It's a small country. The rural population is about 80%, and urban is about 20%. So that tells us the inclusion or exclusion, mainly usually coming from the rural population. But despite that, our in terms of basic education and literacy, Sri Lanka is one of the countries where have normal in terms of the primary and secondary education is well above a lot of other countries and close to developed countries like over 95%, that kind of literacy. But the financial literacy is something below. For example, based on latest, for example, Findex 2025, financial inclusion is in globally 79% average. We are still 83%, a little above. Gender gap is 4% now. It's also not too bad. In terms of that's a basic financial inclusion. But when it's come to digital financial inclusion, is much lower. That is where we're trying to address that the question, what we are going to do. And also, when you look at understand the difference between digital financial inclusion and the financial inclusion, in our case, almost all population, everyone has no issue of bank accounts. 100% population, including children, school children, are having bank accounts to inculcate saving culture or I think at advanced stage. What is lacking, basically, access to credit is much lower because of the collateral, and the financial inclusion or access to credit is lower, like MSME, SMEs, those are not up to that level. But in terms of bank accounts and banking population is almost 100%, although there are other things. In terms of when it comes to digital financial literacy, what are the key indicators what we want to look at is basically the mobile phone accessibility. We are 130% of population are using mobile phones, but within which the smartphone usage is about, I think, the 60% or something like slower. That is one of the gaps. Is basically, although larger population have mobile phone access is there, but smartphone access is, especially the rural areas and elder population. Other part is that we are basically aging population now. It's unlike in our part of the region, like in India, where there's an advantage of democracy is there, but in our case, we have developed to a situation where the population growth is lower, aging population is higher. That is where the financial, especially digital financial exclusion is coming from this, especially the elderly population. So that's where the issue, and what we think important instrument to deal with that digital financial literacy. So why that's important, for example, if you think about a situation where I think I like the analogy earlier, this lady from Jordan make her ex-husband's analogy is an interesting one, practical situation. I like to draw the analogy with, for example, my mother, 87 years old, my mother, is very financially literate. She still know how to manage finance prudently, savings, investment, consumption, as well as managing the portfolio assets are very well done given the education at that level, given the age. But when it comes to digital financial services, she is zero. So what is the reason? That is why we have to understand this is a sample of digital exclusive people in Sri Lanka, especially the aging, large, the rural areas, low-income people as well as elderly, even financially prudent, but they are not digitally financially literate. For example, so my mother, again I take the example, every time when I'm trying to, basically convince her to use she is very good at feature phone, but she is very reluctant to use a smartphone. I'm trying to convince her, why don't you use a smartphone? She is still refusing. The reason is that she is not comfortable. She has no trust in that. So every time what she would like to have, every month she walk into a bank branch and want to see the balance in the passbook, whether interest has come into account, whether he has spent or whether he has any regular transaction. She is very good at. But I'm telling her, why don't you use you can do it easily. But she has no trust in that. So how do you, basically build that trust among people, those who are do not have trust, first the use of a smartphone. Secondly, do the digital financial transaction, because it's a bit complicated. And we know Lanka QR payments, all we discussed in the morning also. You have to have this OTP, it's a risk of sharing OTPs. We have seen some of the scams happening. People have lost money. When people see, especially people who are financially prudent, elderly people or excluded people in the village are very reluctant to use it. I think this is very important one for us is to have a digital financial literacy together with from Central Bank side. We are pushing very hard in two fronts. One is the overall financial literacy. Within that, digital financial literacy is another component of which we are trying our best, and we do a lot of campaigns, go outside into the rural areas, have this education campaign. But I think something came into my mind, how we can encourage, this kind of, for example, someone like my mother. I think there's opportunity here. I don't think we can convince these people to use a smartphone or use digital financial services while explaining the benefits or even seeing the benefits. I think there's easy way now, the social media. So if you look at the younger generation, why every young people have a smartphone is because of the social usage of social media. They're addicted to that. So what I'm trying to show my mother, so we have all WhatsApp group with family members, but my mother can't see the conversation. And I said, why don't you buy at least smartphone for that purpose? That is the one incentive that easily get these people adopted, given the modern social media. Then that is one easy way. Once they get into this, and then we can get them into use of that phone or use the services, digital finance services, while exploiting the benefits of those things. I think this is where I see a challenge. Obviously, digital financial literacy campaign is a very most important one in our view. But I don't think that will work very effectively. Otherwise, you have to use different ways of make them, make it popular so that people will get on board and they use more digital finance services. Otherwise, we've done a lot of things in terms of QR payments. In Sri Lanka, digital financial infrastructure is as good as anywhere. And we are well ahead of India. But when you look at India has done a lot of things in terms of digital finance services in the last several years, and they have leaped forward. And one key difference there is that the unique identification, digital identification is one thing. We don't have that. I think this next step, what we are trying to do is a special good support from government is to introduce digital identity. Once we introduce that, that will be a game changer in my view. Because everything else in place, but how to get these people on board is one thing that we have seen Indian experience is that will make a change for us to leap forward into the next stage. Thank you.
Thank you, Governor. If I have two key lessons, talk about literacy, and it's about trust, customer protection. And Governor, when you find a way to teach your mother, a lot of us would like to know it, so we can teach ours as well. Because sometimes it's extremely difficult.
Yeah, difficult.
But thank you. Thank you, Governor. Now, Esselena, we know that FDS are known for piloting bold innovation. But how do you balance testing innovations with protecting vulnerable customers?
Thank you. Is that work? Yeah, thank you very much. First, I thank the organizer for this forum, for inviting me to be in that stage and to participate. And I thank also the moderator for the question that you just indicated. I have first to say that the FSD is part of our networking, where there are other FSDs. And our major role is to facilitate the market in order to deepening financial sector and via financial inclusion in different aspects, not only just access, but also use, and also always asking to the question, to what purpose? And when you come to the what purpose, it seems to me or to us that we need first to put the people in the center of our work, in the center of our things. And we cannot ignore that at this moment innovation is a key, or is a facilitating all this process. So innovation cannot put inside, but we have to see how we use the best way of the innovation. I will share with you some experience that within the FSD's networking and also in my country we are having in terms of innovation. In 2019, we did our last FEN scope for consumer, and when we analyzed the data for that survey, we found out that the financial exclusion has decreased considerably from 2014 to 2019. And we asked ourselves what was the contributor for that decrease of exclusion. And we found that was the digital component contributed strongly, and not the bank, not the traditional bank, but the digital components. And the second question was, what segment of population contributed or were more active in that reduction? And we found that were women. Women were the one that were using mostly the digital financial service. But then the gender gap is still there. So we come to the conclusion that the gender gap is still there. Although we do have women wanting to use digital service, it seems that they're using, but maybe we can accelerate the reduction of this gap when we have proper product, proper service that are oriented to the needs of the women. And then we initiate another initiative, working with the financial service provider, helping them to understand how they're designing their products that are offering to the market. And we have some financial institutions that we test with them, training them to use the human-centered design approach. We went with them to to the market to see specific needs of the women, and they have to design those products. And within our regulation, because we will make sure that if you do regulation, if you do innovation or a new product, you have to take into account all the legal framework in which this product can be operating. So as I'm speaking, we do have some products that came as a result of that one. And that one helped us also to design what we call Gender Smart Toolkit for the IFS. And this is a smart kit, that toolkit that the financial service provider can use in order to strengthen the way that I design product oriented to women. So it's one example, and within that process, it is important that we test. We make sure that the consumer is protected because we're solving the problem. We cannot put product testing, bring innovation, that in the end of the day, they put in the risk the most important player within the financial system, which is the consumer. I have also here to share that as we talk about innovation, we talk about new technology. And within new technology, our view is that we need to understand. Myself, I used to say that we are in digital era, and within that era, there are people like me that I'm considered digital migrants, and there are people like her that I consider as digital natives. So me as migrants, I want to help natives how to survive or how to live in that era. And this is where I think the migrants are going to help the protection of the consumer. We cannot leave the native alone, the migrants. And the migrants here, in this case, I'm talking about policymakers, I'm talking about people that are designing the products need to have in account that we need to protect the clients. I do think also that within that space, we are in a moment that the regulator, the policymaker, maybe they will have to give some specific guidelines, which are not stable because the era, the technology also is changing quickly. But I think we need some guidelines. And sometimes I'm thinking in having what I'm calling ethical hackers. It seems to me that the ethical hackers are the ones that are going to test to what extent those innovations that we are putting in place for the market are really protecting, are really contributing for the development that all of us were looking. I will stop here and
okay, thank you, Selena. If there is one thing I really want to point out on top of everything you said, and I think the Governor Soraya said as well. I used to be a regulator, so we tend to do policies, but hearing the actual voice of the people we want to do, what we want to benefit from those policies are extremely important. So thank you, Selena. Robin, I'm sorry, it took me a long time to get to you. But what opportunities do you see for regulators? You're not. For regulators and supervisors in not only increasing digital financial access, but in addressing the structural risk of inequality. You're an outsider. How do you see that?
Oh, well, thank you very much. And yes, thank you for reiterating too that I am not a regulator. And in fact, sitting on this panel with so many esteemed governors and central bankers, I do feel like I may have wandered onto the wrong stage. But perhaps that is the point and the value of an outside perspective, where I lead UN Women's global work on sustainable finance and capital market engagement, really focusing on how financial systems either reinforce inequality or how they can help to dismantle inequality. Because we talk about financial systems, markets being gender blind, and indeed they are gender blind, but they are not gender neutral. And I think that's something that we continue to need to keep in mind. And here's the reality. No country in the world has achieved gender equality, which means that every financial system is carrying risks, risks that are unpriced, unprioritized, and often unmeasured. And when the risk that we're facing of inequality continues to be ignored, they don't just affect women, they weaken the resilience and stability of entire economies. I am deeply encouraged, though, about the conversations that we've had in the last few days and the recognition that digital financial inclusion is not just about access, but rather it's a catalyst and it's a litmus test almost for engaging a range of actors across the ecosystem around the ambition of securing women's full economic, political, and social participation. And of course, a lot has been said about what it could look like if we engage women fully in our economies, what that adds to GDP, what that adds to economic growth. And those are all good pointers, but we also need to be very clear and speak plainly about the compounding risks of inaction in addressing structural inequality. This isn't just a social oversight. Arguably, it's a failure of risk management. But what we can learn if we look at the climate example is that, for example, before 2015, climate change has been seen by many as simply an environmental issue. But today, thanks to years of science, advocacy, and leadership, it's recognized as a financial and systemic risk, and as a result of that recognition, has driven critical changes. Climate risks are now embedded in regulatory frameworks, investment mandates, fiscal planning, and financial disclosures. We're seeing increasing volumes of investment being directed towards adaptation and resilience. And so we need the same paradigm shift for gender and social risks. Because gender equality, as we've heard and spoken about, is not just a matter of justice and dignity, but it is a macro-critical issue that suppresses human productivity and human capital. It drives market inefficiencies because capital is often misallocated and mispriced due to structural barriers that exclude women from their full participation in societies. It's also a shock amplifier, and we saw this during COVID, where women were often hardest hit economically, but then also we saw that rates across the world of gender-based violence actually skyrocketed. And so, of course, now I've given you sort of the negative, but how do we change course on this, which is your question about addressing this? I think first we name and we frame it as inaction on gender equality as a systemic risk. And I think we leverage the power of coordinated, evidence-based action. Second, I think there are a range of policy tools that can support regulators, governments, and investors to act. And at UN Women, with thanks to the support of partners like Luxembourg, we're developing financial tools within the ecosystem that can really start to address some of these structural issues around gender equality. And one policy tool I want to highlight is the strategic use of sustainable taxonomies. Many of you are familiar with what taxonomies do. They are essentially classification systems that help guide and help us identify what counts as a sustainable activity, what deserves capital, and what reduces risks. Taxonomies are increasingly being used by central bankers and development finance institutions to guide investment policies, financing decisions, and run stress testing. So by integrating gender equality then into these taxonomies, we can do a number of things. We can incentivize inclusive business practices, products and services. We can de-risk investments, and we can also standardize investor expectations to align with global norms and standards. And we've been working with a number of countries, Mexico being one, Senegal being another, to actually really strongly embed gender equality within these sustainable financing taxonomies. And it's showing, I think, great results and progress in terms of just how much we're able to drive investment then to these critical areas. So in summary, I think the opportunities are there. Some of these opportunities require direct investment. Some of these opportunities are really looking at the policy frameworks that are being developed and leveraging those and ensuring that we have a very, very strong gender lens and gender perspective being embedded in them.
Thank you, Robin. Thank you all for that first round. I see time is running around. We're almost to third. And I have a second round of questions, but I would like to leave some time as well for the audience if they have questions. Now let's go a little bit deeper because we've heard your experiences. And believe me, they are great experiences. A lot of us here can take with us and see how we can put them into action. But beyond specific commitment you've made, how do you balance innovation with protection? Because we heard from, statistics, there are data about it. We are great innovators, but a lot of people, I think it's the governor from Sri Lanka who mentioned it, like for her mother, she doesn't trust. You know, a lot of us, we can build that good innovative system. But the customer protection around it, one single thing can put everything at risk. Like I say, how do we balance innovation with protection or link inclusion to broader national priorities? I'm going to start with Governor Rursenge. You have a large, Sri Lanka, not you. Sri Lanka have a large diaspora who depends a lot on remittances. I am from a country who is in the same situation. But how do you ensure, as a regulator, how do you make sure that remittances are safe, affordable, and inclusive?
Yeah, thank you.
If we can go a little bit very short, like I say, very precise, so we can give time for the audiences.
That's an important one. For example, Sri Lanka, country like us, 22 million people, we have 1.5 million people outside working, Sri Lankans working abroad. They are the ones who are sending remittances. We rely heavily on, as you said, remittances. It's an important source. When you look at the issues that we have been facing, I see a lot of other countries sharing this, and I saw in the morning also, the cost of remittances have been relatively high in the past. Now, with the new technology and also fintech solutions and the technology that it has, all the markets has been coming down. Even our case, cost of remittances on average is coming down mainly because of the new innovations, as I said, financial fintech solutions, as well as the banks and financial institutions have better kind of instruments now to deal with that. That's a positive part of that. And secondly, other issue that we have been facing in Sri Lanka is that even remittances, those are coming into the country. It's important to come that through the formal channels, formal financial institutions like the banks and financial institutions. Whereas, especially in our case, during we had the very bad economic crisis in 2 years ago, where we didn't have foreign remittances coming through formal channels. As a result, there was a huge premium between the formal and informal markets. As a result, a lot of money went outside the system, and those were used for different other purposes that did not give sufficient benefits to the intermediate process of that. But we brought in several measures to encourage even the remittances that those are coming during the crisis time to come through formal channels, and put in certain measures, some regulations so that there's no incentives for people to send money through Hawala Undial. I don't mind Hawala Undial system is also in terms of cost effectiveness, it's low cost remittances, but without proper regulation, and this is a FATF recommendation is also one of the things that we need to regulate, register, and all these things, understand and prevent the misuse of the remittances. That's the second part. One is to bring down the cost of remittances for people who are working abroad. Second one is to get that money through proper channels so that intermediate process can be much more efficient, that money can be used for proper effective purposes of financial intermediation from the financial stability point of view. That's the second important one. We have done a lot of things to improve both areas. So that's positive development in terms of remittances is important for countries like us, especially in our region. Nepal, Bangladesh, Pakistan also are important markets where we are all working together. Another one is the cross-border payments. When it comes to cross-border payments, is a link up with other regional, like Alipay Union Pay, and this Indian UPI is another important one, especially not only remittances but also for tourists to use all these payments through those proper systems. That's another area that we, and also going forward, potential is there for CBDC, use of CBDC. India is now experimenting that is another instrument, useful tool to facilitate at low cost remittances using CBDC instruments. So let me stop here. Thank you.
Okay. Thank you, Governor. Assistant Governor Awal, from your own experience, how can central banks support responsible innovation? I put emphasis on responsible because I'm looking for.
I think, thank you. Central banks are placed in a very critical position to actually drive a lot of innovation. I think, especially in fintech development and others. We're working on several areas. For instance, in the area of green finance, there are a lot of countries that have gone straight into bond issues and all that, but PNG's experience is very different. We're trying to build the structures that govern flow of funds for sustainable finance. So we're basically focusing on flow of funds governance to ensure that it is correct. The other area that we've gone into is in the area of a regulatory sandbox. And regulatory sandbox and hubs are quite useful venues where you can test the products. A lot of our innovations have been tested through, whilst in the regulatory sandbox, they're tested through our microfinance institutions. We use these microfinance institutions as guinea pigs, actually, because we cannot trial it with the major commercial banks, because there's the issue of sensitivity to systemic issues. So most of the time we are looking at smaller institutions that we can trial them out, we test them out, and we've been successful in launching digital identity, which was developed from the regulatory sandbox. So the digital identity that we have, whilst it is allowed to operate, there are still weaknesses that we have within the system because we don't have a trust framework. So idea is to have good governance, and good governance must be covered by things like trust framework. And trust framework can allow for interoperability and also ensure the consumer confidence in the products that we are issuing. So those are very critical areas that we need to always look at. And we should never compromise between governance and the instruments that we're issuing, because that is where the failure is. A lot of the innovations fail because of lack of governance structures. For instance, let's look at crypto assets. When they came, they were very good. Everybody jumped into it, but when it fell quite significantly. A lot of people lost money. And in my country, we don't have regulations, but there are people trading outside the requirements. The banks don't allow it, but there are systems that are used. So now we have to move to virtual asset laws. And these are the things that we don't have, but governance structures are critical for responsible innovation. I'll stop here.
Thank you, Deputy Governor, Assistant Governor, sorry. Selina, Mozambique has been experiencing climate-driven forced displacement, repeated of climate shocks. This is something from where I'm from in the Caribbean. This is our life every year. Should financial inclusion also mean resilience to climate shocks rather than product and services? Because every time there is a cyclone that's come, let's do a new product. But should financial inclusion mean resilience to climate shock?
Thank you very much for the question. It is true, Mozambique is a country that every year has a type of climate shock. I have here to start mention that this year it was a launching of our second round of financial inclusion strategy, and the issue of climate is really well stated in that strategy. And this is in the recognition of how the climate has also affected the financial component, but also how the financial sector or financial system can contribute to the minimize or mitigating the impact of those shocks. So in responding directly to your question, it's yes, financial inclusion should be also resilient, should be also looking to those, to the shock. And I'm seeing in two layers. One is really within the product itself, what type of adaptation we need to have within our service, financial service, in order to respond when people, they have the shock. Because sometimes it's not only the people that are already underserved that are having shock. I can have a shock, but I have access. I do have financial resources in an institution, but if the institution is not ready, I will not be able to reach my financial product. So I do think that we need to have here adaptive way of how financial tools are putting in place to respond when we have shock. The second layer is community resilience. We need also to see how the communities that can support themselves. In my country, we do have some informal, if I can say, informal practice based on savings groups. And you can see how you can, from those savings groups, you can creating some facilities so that themselves, they can also leverage when they have shock, they can have some response. There is a third layer, which I'm seeing, which is related to the infrastructure side. How are we prepared in terms of housing, in terms of responding our internet, all these things, because we're talking in the digital. If there is no power, there is no internet, I will not be able to access my funds. So there is also a component in how the country is ready in terms of infrastructure to respond to this question. So for me, there is no option at this moment, particularly for countries that, and the climate is affecting all the countries, some more severe than others, and Mozambique is one of the countries that either it's flood or cyclone or drought, we always have some things happen, and we do have people that are affected. And here maybe it's also a time to think in some way of how macro insurance can be some things that we include within our financial inclusion, and also seeing how we link with the social protection. So in our work that we're doing at our FSD, we have been discussing the issue of macro pension, macro savings to respond to climate shock. And we have seen that also, again, our women and children that are most affected when we do have those cyclones. I will stop here.
Okay. Thank you, Esselina. Governor, we know that Rwanda has embraced fintech and digitalization. How do we strike the right balance between innovation with financial integrity and stability for vulnerable groups? How do we do that?
It's a great question, and I think it's a question that every central banker asks themselves, especially now that we see more and more technology-driven financial services. Going back to the example I was giving of central bank going to rural areas to train and onboard women on mobile money services, we realized as we were piloting the project that we needed to equip those women with knowledge about digital financial services. But the question we had not asked ourselves is, do they have digital skills? And so we had to work with a government initiative called Digital Ambassadors. These are young people that are recruited in every district of Rwanda to train the population first on the use of e-government services. In Rwanda now, all government services, certificates, basically from your birth to your death, all the certificates you need in your life are electronic, online. And you can imagine that for our population, where we still have close to 20% of adults that are illiterate, it was difficult for them not to be able to use paper-based certificates. And so that program of digital ambassadors, they assist elderly people, people who do not have access to digital device, to actually go as agent to make sure that they can access whoever wants a land title, birth certificate, marriage certificate. And even when you have to pay fines, traffic fines, you need to go to a gateway called Irembo to be able to pay those fines. And so these digital ambassadors actually have sat with us so that we ask, and going back to voices of the underserved groups, we ask them what they need to be able to start using mobile money services or digital financial services, and they train them on the use of a smartphone, the use of accessing internet, and then we come in on the financial literacy once they are ready. And that is one way of preventing frauds, because what would happen is someone is excited about getting a mobile money wallet, goes to an agent, deposits their money, and the agent transfers the money to their own account and not the account of the person who has opened it. And so it's important that as you conduct these awareness campaigns, mobilizing the population to get access to their financial services, you also raise their awareness on the risks and put in place mitigation measures. Second, on financial integrity and financial stability. What we have observed recently were, as a central bank, the risk that we were following up the most or closely monitoring had been credit risk. Now it's more operational risk, so frauds, but also system issues. One, resilience of IT systems, not only on our banks, but the National Bank of Rwanda also supervises the insurance and pension funds, is to make sure that the digitization of those institutions is in parallel with cyber resilience measures, because what you see is, even from just the operational risk where someone would transfer money to the wrong person, or where you would unfortunately have a cyber attack, the losses to the customers are enormous. So what we've put in place as a central bank is a financial security operations center that allows us to monitor all cyber threats and be able to inform in real time all institutions that we might see an attack to one institution. But we also work closely with our National Cybersecurity Agency to make sure that we have an ecosystem that has real-time information on a possible attack, have identified ways to mitigate it. And so it has pushed us as a central bank to also invest enormously in our IT cyber resilience capacity to really preserve the integrity of our financial system. Last point that I want to mention is also prioritizing financial integrity. And this is important for us as a regulator because Rwanda launched in 5 years ago, in 2020, the Kigali International Financial Center. And having a financial center means that you're also potentially attracting people with bad intent, money laundering, illicit flows. And so it was important that as a regulator, we are ready and have frameworks in place. And that's why I go back to the FATF and the importance of building and strengthening capacity in all institutions to be able to detect electronic payments that might be illicit, and what do we do about them? And we work closely with our Financial Intelligence Center in that sense, but also give protection to investors. That we are an international financial center, but as much as we attract financial investors and financial services, global financial services, we are also extremely vigilant about financial crime and illicit financial flows. Now, for the underserved groups, how do you protect people when we have an ambition to become a fintech hub for the continent, to make sure that fintechs or financial service providers are not coming into our country to target the vulnerable population? Assistant Governor Awab has talked about virtual asset and crypto. Our stance as a central bank had been to warn the public against virtual assets, cryptocurrencies, until we had a regulatory framework in place. We know some people are interested in those investments, but you need to be able to protect our retail investors mostly to make sure that they are not going to be victims of such, let's say, virtual assets providers that are actually speculators or scams. And hence, in 2021, a financial services consumer protection law was enacted. It was the first ever in the country. The same year, we had a data protection and privacy law to make sure that those two, as we digitize more and more our services, we have regulatory frameworks and regulatory authorities that are equipped to protect the population. Thank you.
Thank you, Governor. I'm going to ask a last question to Oben. We have some time after that, so we'll take about 2 or 3 questions. If gender inequality is a systemic risk, then no single actor can solve it alone. What kind of partnership do you see? Partnerships are most critical.
No, thank you. And I think, I mean, again, we've spoken over the last few days on the role of partnerships, bringing different actors together. And I think there's a unique opportunity with those of us in the room to do that. Maybe 2 things. One is on the critical role of data partnerships. You know, we've spoken about the role of data, what that does. And I mean, regulators can act on what they see, but ensuring that there's partnerships with civil society, women's business associations, international organizations are essential to identify, first of all, where the data gaps are, and to close those data gaps. I think also ensuring, and we've spoken about the lived realities of underserved populations, ensuring that those lived realities translate into the product design and development. I mean, that requires feedback loops in the design of products and development. And we've given some practical examples, but if we think, I mean, we have a digital economy that we're pushing for, but the role of cash is so fundamental for many people, and it ties to the issue of trust. Because if you're a woman, perhaps in a little bit of a precarious domestic situation, you rely on the fact that you've got cash under your mattress, that if things get really hard or really difficult in that domestic household, you can take your children and leave. But when you don't have access to that cash and you're relying on a digital system where you may or may not have access to someone who can pay that out in cash, your risks, are heightened. And so I think ensuring that we have those lived realities reflected in the data, not just quantitatively, but also qualitatively, is so important. And I think that's one key area where we can see, I think, partnerships playing a really important role as we move forward.
Thank you, Robin. Thank you to all. Welcome back. I don't know if we have any questions from the audience. Oh. I don't see any hands. So I think we were very clear. I think we said it all because we have no question, but let's continue, really, because I have 10 minutes more. I have more questions. Let's continue. So nobody has questions, so I can continue, right? Okay. So, oh.
Thank you. This was wonderful. And I just did not want to let you go. So we started our GPF talking about the role of the digital economy. But we are central bankers, we print money. How do we navigate that nexus? What do we see in the next 5 years? Are we moving away from cash? And should we be concerned as central banks who benefit from seniorage? What do we see? How do we navigate the two? Thank you.
Which one of our panelists would you like to answer that question?
The governor?
We have 3 governors here, so you have to be very precise.
The governor, National Bank of Rwanda, and
Oh, sorry, I ate you.
the governor, Sri Lanka, and yeah, all the governors.
Papua New Guinea.
So, can I take?
Go ahead,
Yeah.
Governor.
So I think that's a good question. Always we have this debate, and also some misunderstanding of, I think, even in Sri Lanka. There's a digitalization is an important agenda, not only for central banks, but also for the governments, for various purposes. Digitalization is cutting across all the sectors. That's why right now all the governments, countries are giving priority. In that context, sometimes there's a misunderstanding. Digitalization means we are going into a cashless society. What I would say, it is not cashless society. So that's two different things. I don't think cash can be replaced with full digitalization. That will never happen in any country. If you look at the experience of any country, need for currency in circulation, even with digitalization, is growing. What we can do is to slow down the growth of currency in circulation, or cost of minting and printing currency, minting coins and printing currency. That can be curtailed. There will be a benefit for the whole central banks as well as others. But I think it's a misperception that with digitalization there will be a cashless or zero cash society. That will never happen in my view. Cash is always will be there as a store of value. I think I saw recently Indonesia is a very highly digitalized economy. Even India, currency in circulation is always growing. It's not declining. It's growing, but growing at a lower rate. So that will be there anyway. What we can try for is to digitalization obviously have much broader benefits for any economy. As we mentioned, we discussed in the last session, digitalization is not a cost; it's a net benefit for the consumer, for commercial banks. In terms of this managing cash is costly, and also central bank printing notes and coins, minting coins is a costly. It's a benefit to everyone. It's a net terms. It's a benefit, digitalization, but it's not going to come to a situation where there's no cash in an economy. That cash will always be there. That's my personal view. Thank you.
Maybe I'll share, for the case of Rwanda, what we have seen is that true electronic payments have grown substantially, now representing in terms of volume 340% of our GDP. But at the same time, what we have seen is that in the last 15 years, our economy has grown between 7% and 8% annually. And that GDP growth actually leads to more cash in circulation. However, the electronic payments now, they are about 15 to 20% of all payment channels, so cash is still representing 80%. And we've tried to understand the reasons why, because a lot of people have adopted electronic or digital payments, and yet they still use cash. And we see that there were 2 main reasons. One is that in rural areas mainly, although they had the savings and credit cooperatives, And though they have access to mobile money wallet, trust is still in cash. And cash transactions, because they are perceived as free, and the fees on mobile money transfers tend to be quite high for low-income communities. And so the cash is still much in use until we get to a point where you would zero rate P2P transactions. A second project we're working on is exploring a CBDC to see whether there are benefits that we see for our population. We are now at the proof of concept stage. And in our research on CBDC for the Rwandan context, what we've seen as benefits were fourfold. One, the potential of a CBDC to lower the cost of cross-border transaction. And second, the potential for CBDC to be relied upon if we were to see more adoption of virtual assets, to at least have an option that can be used, which is central bank backed currency. And so to summarize, we don't think we will have a cashless economy, totally agree with Sri Lanka, but trying to see how we reduce the use of cash in the economy and offering more options to users. So the instant payment systems, CBDC might be one option that complements the cash. Thank you.
Thank you.
Thank you. I think the issue of replacement of cash in the near future with the current system might not be as possible because the cash is the underlying asset that you have when you conduct a transaction. So I don't see cash disappearing. But even in the advanced nations where a lot of transactions are digitalized, cash has still been available. So I think the challenge comes with central bank digital currency. When it is introduced, what happens to cash? The primary reason for the intentions of countries to go with central bank digital currency for developing world is primarily the issue of financial inclusion. And with that, I think that is the challenge where you have whether cash will replace, central bank digital currency will replace cash. But a lot of developed countries, they still would want to retain cash, and that is quite I think some of the ways that many have, although they could possibly do away with it. I think the use cases are not there for some of them, but in the developing world, where there is a high demand for financial inclusion initiatives, it might be that it might swing to the use of cash, but I don't see it as completely eliminating cash. It might complement cash in a way. So you have digital currency issues and then cash issues.
Thank
One more thing on the CBDC, I think what I've seen, one of the research indicated, CBDC, obviously, there are two parts. One is a wholesale CBDC and retail CBDC. So wholesale CBDC is something is similar to RTGS. There's no big difference there. Retail CBDC is one that can replace currency in circulation, but the research shows basically maximum it can go is to replace 30% of currency in circulation in any country. So it can't replace the whole currency stock or currency in circulation by CBDC. It's not, it won't happen. Even with introduction of CBDC retail level also.
Okay. Thank you, governors. So I thought I didn't have questions. Time is running, but I have another one. I'll give the governor some time for this question.
I don't know whether you have for answer, but I'm leaving the question here. It seems to me like when we say underserved or unserved, we are assuming that because of different barriers, like literacy or trust or all those things, they are not going to the providers or providers are not reaching them. But the analysis, it assumed that access to finance, one is like what we are saying here, cash, cashless. Whatever I'm doing, it's like in different modality. But the important thing is for underserved and unserved, the extreme poor, is the access to finance like loans, right? Those products. I have seen that providers, they have fund, but they exclude some of them because their productivity, their opportunity, and also their capacity are not at that level. So the question is like those who are capable, then we can literate them and we can do all those trust building and security things. But those who are not capable, what steps regulators can undertake in that areas? Like someone says like micro-insurance for climate risk. But climate risk is like for if there is a drought in like say entire area of a region, right? So there is no cross-pooling. So insurance is like when like out of 10, 1 or 2 are in danger, the 10 can cross-subsidize each other. But that kind of risk is like when it comes to everybody in a specific region. I think we need to think about different design from the regulatory perspective. Thank you.
Thank you. We're running out of time, but before I give my closing remark, but I would like really a very bold question. That will be your closing remark for each one of you. You have to answer the same question, but very shortly. What bold step would you personally take in the next 3 years to accelerate digital inclusion? I'm not looking like bum, bum, bum. Each one of you. I'll start with you, Robin.
Okay, great, thank you. I would say an ask then is really to mandate the disclosure of sex disaggregated data across savings, lending, insurance, and investment, working on harmonized definitions as well. You know, we don't even have a harmonized definition across countries of what a woman-led SME is. There's different definitions, so I think really looking at that, ask who is missing, and turn evidence into action. Thank you.
Thank you.
Yeah. I am also in that one because it's a project that we are running at the moment in Mozambique on women entrepreneurship finance access, we call code, and it's basically to make the disaggregation of data for that segment, and there is also a discussion of the harmonized definition. The second one for me is digital literacy. And within the digital literacy, it's not only for the underserved. I think digital literacy is for all of us. In order then, I like the idea of digital ambassador. I think it's my second component before I go to others.
Thank you.
Yeah, for me, I think as I mentioned earlier, in our case, the game changer would be to introduce this unique digital ID, because everything is in place. Once we bring in that will accelerate the digital financial services usage. That's the first one. Second one, obviously, is the availability of digital services like access to internet, access to data at competitive and low cost is another important one. So once you have this, once infrastructure is ready, once we have this digital ID thing, and also at the low cost access to internet for the whole country, these are the immediate things that will accelerate usage. Obviously, digital financial literacy should go in hand parallelly for people to get on board and understand and educate them. Thank you.
Thank you, Governor.
So you asked a question that I would almost call our KPIs for the next 3 years. And for me, I think two things. One, if we want to accelerate inclusion for underserved groups in the digital economy, for Rwanda, what's really our main challenge today is access to credit. So on access to mobile money wallet, mobile money services or bank accounts, we are at 92% of adults, very good. But credit, only 12% have access to credit. And so for me is if we bring the underserved groups, and if I take women and youth, I'm already, more than 70% of our population, if not almost our population, so that access to credit increases to 50% at least. Second, we still have a very low insurance penetration rate at 2% if I remove the universal health care. And so if we can bring that insurance penetration level to 7%, which is the average for Africa, then I think I can retire after 3 years. Thank you.
No, we want you to stay. Governor.
Thank you. I think I have a lot more pressing issues from my country. We have a Vision 2050. It wants to have a banked society. So how do we deliver it is the biggest challenge on an innovator's shoulders. How do we deliver it? But I think we are going to have to work with the best technologies that we can find to transform the economy, to mobilize the people to have a bankable account, to have access to the financial services that every person would want to have, to not to be denied of the banking services that they should have, and to make and empower them to live a normal life and get away from the shackles of poverty. That's what I can say. Thank you.
Thank you. As a closing statement, I would say first, just to resume, we learned that digital financial inclusion is not just about technology. It's about trust, resilience, and human dignity. Second, we have also learned that innovation must be responsible. Inclusion must go hand in hand with integrity, customer protection, and sustainability. Otherwise, we risk widening the very gap we seek to close. And lastly, collaboration is essential between regulators, innovators, civil society, and the disadvantaged people themselves we're trying to serve. Thank you very much for my 5 distinguished panelists. You shared your leadership and insight, and I thank you, the audience, even though I didn't have a lot of questions, but I think that my panelists did a great job. That's why you didn't have a lot of questions. But you were here and you listened, and thank you very much.